Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I will be your host. So today we're talking with Leigh Goehring. Hey, Leigh, how's it going?
Very good, Kirk. Thank you. Thank you for having me today.
Great. Well, I'm glad to get you on the show. I know I've been trying to get you on for quite some time. I know you're a busy guy, so I appreciate you carving out some time for us. But I wanted the listeners to really understand what was going on because we, for whatever reason, don't hear about food or agriculture in the news as much as we probably should. So, Leigh, why don't you tell us a little bit about your background before we begin?
Okay, I should tell your listeners that I'm half of the firm Goehring and Rosenzweig Associates. That's a firm that's dedicated to researching and investing in global commodity markets, which obviously includes agriculture as well. I've been doing this exclusively for well over 30 years. Between 1991 and 2005, I ran the Prudential Jenison group of natural resource funds. Then I ran the Chilton Global Natural Resource Fund from 2005 to 2015. And in 2015, my partner, Adam Rosenzweig, and I started up this firm. And what we are is we're value investors, and we love to get involved in commodity markets at the end of commodity bear markets where no one wants to invest. We do a lot of research, and we try to buy securities often at depressed prices where no one else would like to do that. It's a strategy that we've used in managing money for the last 30 years, and we've used it very, very successfully. We don't always get it right, but it's worked well for us the times that it has worked.
Great. Well, let's just dive right in, Leigh. I don't want to waste any time. So, you've been saying that we have a global agricultural crisis. Where does this stem from? Like, what kind of crisis is it? And, how did this kind of get started?
Yeah, and I'll step back 1 second, Kirk, on that. When Adam first came to work for me back in 2007, so that's 15 years ago, I told him that we wanted to do all our research and we wanted to be in print, uh, uh, documenting big changes that were taking place in global commodity markets long before the general public and the general financial press began to put it on the front page. And this global agricultural crisis fits in perfectly to what we try to do. About a year and a quarter ago, a year and a half ago, we wrote a big piece in one of our quarterly letters called "The Coming Global Agricultural Crisis." And in that, what we had identified and chronicled various trends that emerged in global agricultural markets, which people just hadn't recognized, which we believed at some point was going to precipitate a crisis, which of course it has. Now, one of the biggest inputs causing this global agricultural crisis, which, as I would like to point out, I believe is going to, you know, basically manifest itself in various forms throughout this decade, is underlying strength in global grain demand. If you go back, say, from 1980 to 2000, and you look at global annual increases in global grain consumption, it averaged about 1.3% per year, which was actually below population growth, which is about 1.5% during that time period. So you actually had per capita grain consumption actually go down. However, starting in 2000 all the way to for the next 2 decades, that trend changed dramatically. Global grain demand basically went from 1.3% almost up to 2% year over year growth. And there was a very interesting reason why that happened. Obviously, as every emerging market country, as it gets richer, it begins to slowly change its consumption preferences. When you're poor, that is, you're somewhere between 500 to $2,000 per capita GDP. Your diet is primarily starch based, either bread or rice. However, once you start to become richer in that emerging market, your per capita GDP starts to surpass $2,000. You begin to change your dietary preferences. That is, you choose to eat more animal protein. And this is a documented fact that we've done all the research in emerging markets, going all the way back to the 1950s to document this trend. And what's interesting is in 2000, you had a number of countries enter that period of rapidly changing dietary preferences. And the great example of that is China. And China's protein consumption, basically quadrupled between 2000 and today. But what's interesting about that strength in global grain demand that's being pushed by all these emerging markets is that this trend is nowhere near done. Even China today, which has gone from basically $500 per capita GDP to $10,000 per capita GDP. If, for example, that they wish to go to $15,000 per capita GDP, which they've stated as their goal, that means that they've got to increase their grain consumption by another 40%. Or I shouldn't say they have to, but they will increase their grain consumption by 40% to satisfy their animal protein preference increases. But it's not only China now. India, Pakistan, Bangladesh, the Philippines, Vietnam, Thailand, Myanmar, uh, all these countries are now entering this period of rapidly changing dietary preferences where you desire to eat more protein. So, this strength that we've seen in underlying global grain demand is 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 a trend that we believe is going to that has emerged and will continue to push forward as we go into the century, this decade, and it's going to be one of the reasons. It's one of the reasons why we have this agricultural crisis today, and why we believe it'll continue in the future.
So interesting. I've noticed certainly for the last 20 years, if you look at grain prices in the U.S., they've been, I don't know about historically, but they've been lower than I would expect they would have been. And then, if I look at a lot of the changes, it seems like there's a lot of support in our government for farmers in the, in the middle part of the country. And they've done things like, ethanol and other things like that. So, how do all those trends play in? Because there's obviously, if you have an increased consumption from, globally from emerging markets, and then you have a push here domestically for more people using grains. How does that turn into a crisis? Like, where does that line drawn from kind of where we are now?
Okay, Kirk, you bring up a really interesting point, uh, and that is the whole ethical quandary that's going has emerged around, or should emerge around, the use of biofuels. You mentioned ethanol. Obviously, the U.S. ethanol industry was something that was jump started by the U.S. government all the way back in the 1970s, and now the ethanol industry has turned into a huge global industry into itself. And you combine that with biodiesel, which is coming on very, very strong. What you've done by doing this, and it's very, very insidious, and it's already creating a lot of problems. And I'll outline those problems in actual statistics in a minute. But it's creating a lot of problems, and that is what you're doing is you're hooking the global energy markets into the global grain markets. So, we're a big believer that we're in a global energy crisis that could very well mirror the magnitude of the energy crisis we're going to have in agriculture this decade. And so, what you've done is you've taken, high oil and natural gas, diesel prices, and you've hooked those high oil prices, energy prices, into the grain markets through the biofuels mechanism. And I should point out that, back 15 years ago, the world produced 500,000 barrels a day of biofuels, and we're online in the next couple of years. They're going to produce over 3.5 million barrels a day of biofuels. It's the second largest line item of oil growth in the global economy over the last 15 years, only surpassed by the U.S. oil shales. So the thing is that, it's as oil prices and natural gas prices go higher, there's going to be more and more demand pushed over into the global agricultural markets. For example, today, this is what a statistic that very few people understand, that today's corn crop, which is almost 15 billion bushels, 40% of that corn crop gets turned into ethanol. 40%. In soybeans, about 25% of U.S. soybean production is crushed into oil, and that oil is turned into biodiesel. So, obviously, it's going to be another exacerbating factor that creates these problems in global grain markets, is the fact that you've hooked the grain market into the global energy market and the crises that are going to have already evolved there.
So you said 40% of soybeans is going into
Yeah,
basically fuel at this point.
yeah, 40% of corn and 25% of soybeans.
Wow.
Yeah, that's
That's a lot
those are
larger than I
those.
thought.
Yeah, that's how big and intertwined the energy markets and the global grain markets have become.
So let me ask you, why? I mean, I know when this started to happen. I forget when it was maybe in the last, you know better than I, but it happened a while ago. I remember when it happened and there was a big outrage about, it was probably under Republican administration because I know that they're supporting the farmers. But there was a push to put ethanol in our fuel, and people were complaining, well, it's bad for the cars, it's good for the cars, whatever. Everyone had an opinion. I'm not sure what was right, but when that started, do is there an improvement there, or is that just more of a political thing?
No, it's actually at first it was heavily subsidized. You're right, by the U.S. government, and it was done. It started. It really gained momentum in the early 80s. And if you remember, back then grain prices were terribly depressed, and that there was a huge, massive surplus of global grain in inventory during that time period. And if you want to laugh, you remember, all these rock stars had to put on all these concerts to try to save the farmer in America, called Farm Aid and things like that.
Yep.
And ethanol was part of that, to try to save the farmer because of these massive grain inventories that existed, which depressed price. And they thought, well, we'll just turn it into ethanol. So there was a lot of government subsidy at first, but most of those, almost all those government subsidies have now been removed, and now ethanol is just surviving as a pure economically driven industry that's making a profit. So, it's an unfortunate unintended consequence of something that the government promoted literally 30 years ago, and it's turned into a monster. So, if you wanted to do something about it, you'd have to put some sort of special tax on ethanol, or uh, basically outlaw it. But we're actually going in the wrong direction, Joe. There's a big push to go from E10. That is that the average American gasoline gallon that they buy, which is now 10% ethanol. There's a big push to try to push it to 15, including the Biden administration this summer tried to encourage the use of, or remove rules that prevented the use of E15 blending for gasoline during the summer months. So we're actually still going in the wrong direction. We're still trying to push forward with biofuels.
So it makes me wonder, where does that trend go, and at what point does the food market, become problematic? I mean, you're talking about this impending crisis, but when do we get to a point where it's a real problem? Do you have kind of like a date, or what's going to
Well,
cause it to happen?
I think that all these things, whether it be the strong global grain demand, we'll talk a bit about changing weather patterns as well, or whether it's the big increase in grain consumption coming from the energy sector and biofuels. The crisis is here today. I mean, especially, obviously we have big food inflation here in the U.S., which is now gaining attention by consumers. But there's many places in Africa where people are on the verge of starvation. There just is not the food available because of all these factors. And so I would say that the crisis is here today, and I think that for the crisis to really get worse, is we're going to have some sort of weather weather event in the next couple of years, similar to the floods that we had back in the Midwest in 1995 and 96, or the drought that we had here in the U.S. in summer of 2012, that really severely reduces crop yields and the size of the crops, which really forces grain prices higher.
Well, I know, I mean, I can't speak for the whole country, but I know here in the Northeast, we've had more or less a drought this past spring and summer, and I believe a lot of the country had similar conditions. I'm not sure how that affected grain prices, but it certainly, I think it rained like 3 times all summer. So, I mean, and I know the water levels here are extremely low, lower than I've ever seen them. So, So, when I look at, obviously you can't predict bad weather. That's just, you just, trying to predict something that you can't predict. But, you know, is there an end to this? Do you see there's a solution to this path and this trend?
No, in fact, I think it's going to go the opposite direction, and this would be a good time to introduce the whole concept of the potential change in weather that we're going to see, which obviously is headline news, or I think some of it's misdirected on what the underlying causes are. But one of the interesting things about, I mentioned before how global grain demand has ratcheted up basically by 60% over from the 1980 to 2000 period versus the 2000 to 2020 period. And one of the reasons why that didn't really cause any problems, because that's that, every year you have to produce a huge amount of new grain to meet that new grain demand every year, is that over the last 30 some odd years, we've had a string of incredibly great global growing conditions on a worldwide basis. And it's almost unprecedented, and people talk. I mean, you read the popular press that says, "Oh, global warming is going to be terrible for agriculture." I would say just the opposite. Over the last 30 to 50 years, the warming trend that we have been in a warming trend, has been incredibly positive for global agriculture. One of the reasons what's happened is that it's in the northern hemisphere. It has lengthened the growing season. Here in the U.S., since 1980, the growing season is basically about 10 days longer than it was back it was 40 years ago. And a longer growing season means that you have much don't have late spring frosts. You don't have early fall frosts, which often severely impacts crop yields. Those get pushed away, and it increases your yields. So I think that one of the big, untalked about, uh, underlying reasons for the big yield increases we've seen in the last 40 years is because weather has gotten better and we've lengthened the growing season. And it just hasn't been here in the US. It's been all over Europe. If you look at both the Ukraine and Russian grain yields over the last 20 years, and part of it is a recovery from the post-Soviet era, but because of a lengthening growing season, that the size of those crops are both up like 60% over the last 20 years. And a lot of it has to do with just a lengthened growing season. So the thing is, we've been in a very, very good cycle of growing conditions, and I think that that's going to change. Now, what I'm going to talk about right now is very controversial, and
We love that.
there's a lot of people that talk about this. It's very, the science behind it. There's some people that believe it has a lot of scientific backing. Some people don't, and it has to do with this concept of sunspot cycles. And one of the interesting things is that for those that are familiar with or unfamiliar with sunspots, the sun goes through a regular 11-year cycle of sunspots where there's every 11 years you reach a trough where it produces almost no sunspots. The sunspots increase over the next 6 years, peak, and then roll back over basically zero. It's an 11-year cycle. And what's interesting is that that cycle, we have records going back literally almost like 600 or 700 years ago. The monasteries in medieval Europe, the monks used to track sunspot cycles even back then. And what's interesting is that uh, periods of strong sunspot activity are associated with warming trends that are associated with good global crop growing conditions. Periods of declining sunspot activity are associated with cooling trends and are associated with very disruptive weather patterns. And I would make a case that over the last 50 years, we've been in an unprecedented strong sunspot cycle, and where every sunspot cycle has been just as strong as the previous one, which is, of course, produced what I think is a warming trend, and it's produced very, very good growing conditions. This is the 25th sunspot cycle that we now measure, that we're in now. This will be the third sunspot cycle that is declined significantly from the previous one. And it looks like we're going into, for reasons that even the people that study the sun, the astrophysicists, etc., don't quite understand, it looks like we are going into a period of declining sunspot cycles, which if you go back hundreds and hundreds of years ago, is not uncommon. And So the thing is that the fact that we're now entering this period of declining sunspot activities, I think it's no coincidence. The weather has already started to become much more challenging, as portrayed in the popular press, floods, droughts, things like that. This is what's associated with periods of a cooling trend in the global weather pattern. So if that's the case, and we see more disruptive weather patterns through this decade, I suspect that that will be another huge problem that gets introduced into global agricultural markets. And think about it, we talk about how severe the weather is, and I don't I don't think that's accurate. I think that the weather's been actually relatively mild, hurricanes, tornadoes, things like that. Go back. What happens if we were to experience an event like the Dust Bowl years of the 1930s, where basically between 1932 and 1938, it was one of the worst droughts on record, obviously here in the U.S. What would happen if we experienced something like that again? And so that's the type of things that could become more uh, more problematic and with more occurrence as we go through this decade.
No, I love that perspective, because I've read about this before, and unfortunately, I think a lot of people, not enough people, talk about it. I do have a question for you, because I think when we talk to this climate change or global warming, or whatever they want to call it, there's always one thing that was puzzling to me, which is, you look back, I think it was medieval warm period, where they had record harvests. Apparently, I'm not an expert, but this is what I've read. What I wonder is, if the world is warming, and let's say there's more carbon dioxide. Carbon dioxide is good for trees. I would think that increased carbon dioxide in the air would be good for crops as well. I don't know how much of an impact that is. Do you have any kind of information on that? Because that's always been a curiosity to me.
Yeah, Kirk, I don't have that much information on the relationship between CO2 concentrations and biomass growth, that is trees and crops and things like that. I don't know what it is, but you do bring up an interesting point about the medieval warm period. I've studied that. That's a fascinating period, and it was a period of global warming. They believe it was a period of very strong sunspot activity, which was then followed by the Little Ice Age, which was a period where sunspot activity for almost several hundred years disappeared entirely. But during that global warming period, and there's a lot of you know, climatologists are debating this. There's a lot of evidence that basically that period might have been just as warm as it is today. There's some evidence says that some evidence says that it's not. But the funny thing is that obviously that period, the Vikings colonized Iceland, they colonized Greenland, they got all the way to Newfoundland, founded a colony there during that period. Obviously it was a time of great agricultural surplus. All the cathedrals were started and built during the height of the medieval warm period, because there was so much wealth to be generated by agriculture, that the church got rich, and then it all came to an end. It started in the calamitous 14th century, and that was the beginning, and it happened very fast. It was the beginning of the Little Ice Age, and weather patterns changed dramatically over the next several hundred years. So the thing is that, again, it's all tied in sunspot activities and things like that. But, again, global warm, it's, that medieval warm period, it's a classic case. Global warming is good for agriculture. Global cooling is very bad. And there's a lot of evidence that we might be leading into a global cooling period driven by declining sunspot cycles. Again, tremendously controversial, huge debate around it. Some people says it's ridiculous. There's no causal link, whatever. But it's an interesting thing to study, and there does seem to be some very broad relationships between those things.
Yeah, no, I appreciate you bringing it up, because I've read about it in the past, and as you said, it's very coincidental that this enormously warm period also was, I don't know if it was the peak, but at a peak of sunspot activity, which I guess if you look way back, it coincides with a lot of peaks of civilization, and then as things turn, it tends to civilization turn. So let's hope we're not at the peak, because that that would not be a good way to look at the next 10 years if you're preparing for retirement. But I think, and things we talk about in the show a lot are a correlation versus causation, right? You can't always tell what which one is which, but I think it's helpful to get these perspectives because it gives you another piece of data to think about. So I appreciate you bringing it up, and as well as pointing out that it's controversial, because I think any science is, whether it's quote unquote settled or not, it's always going to be controversial. So I
Yeah,
appreciate it.
and Kirk, you brought up like the weather patterns this summer, where it was extremely dry, super dry here in the east, and it was certain parts of the Midwest were very dry, and it was very very hot too there as well. And that weather significantly impacts crop conditions and crop yields. I just wrote these down before the show. Back in uh, June, when the United States Department of Agriculture did their first estimates of the size and yields of both the U.S. soybean and corn crops, you'll see what this negative weather, what impacts it had. For example, the USDA originally believed that this year we would harvest 90.1 million acres of soybeans, which would have a yield of 51.5 bushels per acre. But because of this adverse weather we've had this year, we're only going to harvest 86.6 million acres, and the yield is going to fall from 51.5 down to 49.8. Now that means that this year's soybean crop is going to be 7% smaller than usual. And since we're basically the world's second largest producer of soybeans behind Brazil, that has a significant impact on the global grain supply demand balances. Corn's the same thing. The U.S. government believed that we were going to harvest 81.7 million acres of corn with 177 uh, uh, bushel per acre yield, which would have been would have tied the old record. Actually, it would have been a new record. And they reduced that from 81.7 down to 80.8, and the yield from 177 down to 172. So the thing is that the corn crop's going to drop by 4%. So again, we're obviously the world's largest corn producer, and so the thing is that that's going to have a big impact on global corn supply demand balances. So all these weather issues you combine that with the problems we had in the U.S. We had a drought in Europe, which basically cut their coarse grain production by about 15%. And then I said before that we should probably talk about Ukraine. Ukraine is another problem that's going to continue to fester in global grain markets. For example, Ukraine is one of the world's largest producers of both wheat and coarse grains, soybeans, corn, etc. And exports from the Ukraine basically represent 10% of this global seaboard trade in wheat and coarse grains. And this year alone, because of fertilizer shortages, manpower shortages, everything, field damage by war-related field damage, the Ukraine coarse grain and wheat crop is going to be down almost 50%. And so we estimate that we're going to lose, basically, close to half of Ukraine's exports starting at the end of this crop year, which will go all the way into September of next year. So we're going to lose another huge chunk of global grain supply just from that alone. And so all these issues are causing the grain market to exhibit continued tightness.
Yeah, that's I appreciate you bringing up Ukraine, because I think I remember hearing about this as a kid, that my father used to say they were the breadbasket of Europe, and
that's definitely true. And like I said, Ukraine, if you go back over the last 20 years, their wheat and coarse grain harvests are almost up 100%. I mean, obviously the importation of Western farming technique combined with excellent grain growing conditions has made the Ukraine a global grain powerhouse.
Yeah, it's so I imagine, I mean, it's funny because you see the news here and you just think that the whole country's at war, even though it's not. So you're saying that the crops are going to be down 50%?
Yeah. The latest in fact, I just wrote them down just to double check on that. The latest USDA figures, at their peak, Ukraine produced 33 million tons of wheat in 2021. This year, it's estimated that that'll fall to about 19 million tons. So that's a drop of 14 million tons. I guess that's what, like 35% or whatever. Coarse grains going to go from about 54 million tons down to about 39 million tons. So that's a drop of, I don't know, is that,
Like 40.
again, I think that's another drop of about 25 to 30%. So it's not 50%, but it's significant. And that will, again, wind up in significantly less Ukrainian grain export starting right now into the September of 2023 crop season.
So who are going to be the one? Who are the or what are the areas that'll be affected most? Because I don't imagine we're importing Ukrainian grain here. So I assume some countries will have more of an impact than others. So what does the war in Ukraine impact most? What areas of the world?
What it's going to do, the trend has already emerged, is that obviously richer countries, and we talked about all those Asian countries that are experiencing increased protein consumption, which needs additional grain consumption to feed all that. They're basically buying that, and basically they're bidding it away from the poorest people in the country, and that's basically from Africa. The Africans obviously are getting cut out from this, and that there's a lot of talk about the big agricultural problem in Africa, and Africa's got another interesting problem too, in the sense that this is one of the other things we should talk about is the fertilizer crisis that has developed in the last year or so, which is again going to be another factor that produces additional crisis in the global agricultural markets. I'll throw a funny statistic for you. Between 2000 and 2020, total global grain output, I think, increased by about 60%. Does anyone want to guess what total fertilizer application increased during that time period? That would be nitrogen, phosphate, and potash, 60%. And so you could see, it's not only great crop growing dishes and not great crop genetics, but it's a huge increase in fertilizer application that has allowed us to meet that grain demand. And one of the things, obviously the biggest input of nitrogen fertilizers, which is one of could be one of the more important fertilizer groups, if not the most important, is natural gas. And of course, we're in a global natural gas crisis. And again, how all these supply problems are emerging. We estimate that in 2022, that global nitrogen production has been curtailed by about 5%. Now, a 5% reduction in global nitrogen application, we estimate, and there's a couple models to try to estimate this. That's going to impact crop yields by itself by somewhere between 1 to 1.5% reduction on aggregate. So the thing is that the global agricultural, and remember, think about fertilizer. Fertilizer is basically incredibly energy intensive, and again, it's one of these strange hook-ins that's taken place. The problems with fertilizer production and high energy costs, how the high energy costs have impinged fertilizer production, including the fact that earlier this year, China banned urea exports, which is the solid form of nitrogen, and phosphate, because phosphate is obviously making phosphate fertilizer is incredibly energy intensive, and they stopped doing it and then banned exports. China's the world's largest exporter of contributor to the seaborne phosphate fertilizer market. So you've got all these fertilizer issues that have cropped up on top of all the other things we've talked about. And speaking of fertilizer, one of the big things about fertilizer, and this is on the margins, but is very, very important, doesn't get a lot of writing, is that huge amounts of the third world, which includes Asia, parts of Asia, India, and Africa, farmers couldn't apply their normal fertilizer levels because of price. A year and a half ago, urea prices were $250 a ton. Urea is the solid form of nitrogen, which is commonly used in most of the third world. And what happened is this spring, for urea prices hit $900 a ton. Now, farmers that don't have access to banks or any sort of credit, which all these third world farmers don't, it's strictly cash. They just didn't have the cash to buy the fertilizer to apply it. So that is going to be another huge impact to the 2022 overall crop yield that no one has in their models because it's difficult to compute, but it's something that we've studied anecdotally and have noticed over and over again. So the thing is that, again, just you know, this global agricultural crisis is just it's coming from everywhere.
So, some other things that kind of come to mind here as you're talking about this, it sounds like, there's a bit of, I think you call it food nationalism going on with different countries. Um, I think there's definitely some countries like the US that certainly have more resources, and Ukraine prior to the war. How's this all going to work out? I mean, we've had a few decades of globalization where everyone is playing nice and they're exporting and they're trading with each other. But now that people are getting a little bit more nationalistic with their needs due to the fact that it's more of a priority, obviously, dealing with your own citizens and international. But how does this all play out? I mean, food national that doesn't go well when people can't eat.
Yeah, it's gonna be a huge problem, and it's started to rear its head. It doesn't get a lot of press, but it's something that's very important, which I think is going to increase tremendously as we go through this decade. And it's representing of a couple of things. First, it's basically another piece of evidence of the coming undone of the globalization trend that's been in place in the world over the last 60 years. Obviously, the free trading of grain has been an incredibly important part of globalization. And what food nationalism does is that when you run the risk of either having a shortage of a crop in your country, or you want to bring down the price, you ban the export of it. And we've seen some very high profile uh, bans of food exports, that started right after the Ukrainian war started. First, Indonesia banned palm oil exports. Now, it's interesting why that happened, because it turns out that Ukraine is the world's largest sunflower oil producer, and when all that sunflower oil was being blockaded by the Russians, that drove up palm oil prices. And Indonesia, being one of the world's largest palm oil producers, banned and having a huge indigenous use of palm oil, banned palm oil exports, which drove spiked palm oil prices up tremendously. We don't think much about palm oil or oils in general because we don't use it to cook with that much. But throughout most of the third world, cooking oils are what, that's the basis of your diet. That's you cook in a hot frying pan in oil, or everything you eat. So, that was a huge thing. Then, then India, had a very dry, unusually dry spring, which really stunted their winter wheat crop this year. And that winter wheat crop basically fell 10% in volume, and they banned wheat exports. Now, it turns out that India has, in the last several years, has crept up to be like the world's third largest wheat exporter. So they banned wheat exports. Then they turned around and they banned sugar exports. Then they turned around and India has just banned rice exports. So the thing is that as the global food chain gets more and more strained by all these supply issues that we've talked about over the last hour, they were going to see food nationalism, become a larger and larger problem on the globe as economies attempt to protect themselves from all these forces. And it's only going to exacerbate the problem and make the problem worse. So
let me just ask you, because I know we've been kind of going down a road here where things don't look good. So let's kind of pull it back a little bit and let's talk about the implications for investing. So obviously these are big trends, and I'm sure there's probably more that we could get into. But how does this play out if somebody's looking to? I mean, even in crisis, there's opportunity. So where
yes.
is the opportunity in agriculture right now?
Well, we've talked about fertilizers, and that this
Mm-hmm.
is going to be, one of the great inputs to this global agriculture is going to be fertilizer shortages and things like that. I recommend everyone buy the fertilizer stocks, and stocks like Nutrient, which is extraordinarily high quality, Mosaic, CF Industries, Intrepid Potash. Those are Those are stocks, producers that will benefit from all the trends that I talked about. And here's what's interesting about those stocks is that you take a stock like Mosaic. Mosaic, 20 years ago was a company that had huge problems. Their flagship mine was the Esterhazy mine up in Saskatchewan. That mine had severe water flooding problems 20 years ago, to the point where there was even talk of having to close the entire mine, a massive mine, 10 million tons of potash output. Those water problems in Esterhazy have now been almost all fixed. Costs have been lowered tremendously. And this stock today trades at basically 3 times earnings. Now, I should point out that back in the previous fertilizer cycle peak, which occurred back in 2008, where the entire fertilizer complex got surpassed $1,200 a ton. That is nitrogen, phosphate, and potash. That uh, that Mosaic traded at basically almost 20 times earnings, peak earnings. And here it is a cycle that has years and years left to run, is basically trading at 4 times earnings. And Nutrien, which is a super high quality company, one of the world's largest potash producers, and one of the world's largest agricultural suppliers, that trades at basically under 5 times earnings. So again, in the previous fertilizer peak, that stock traded almost at 20 times earnings. So the thing is that here are these stocks at a bottom of a cycle trading at very, very incredibly low multiples. So they represent phenomenal long-term investment opportunity.
Okay, great. No, I love that. So let's also talk about technology, because I know in the ag market there's a tremendous amount of technology taking place. I'm not sure what stage, if it's really being applied, but I hear about all these different things like vertical farming. There's I'm drawing a blank on it, but basically people will wire up the plants so they can see how much moisture is there, and there's really some interesting stuff coming out. So where do you see all of that going in terms of the technological trends?
Yeah, that's interesting. That all indoor agricultural, hydroponics, all that sort of thing. But I think that's all. I think that's all marginal. The biggest technological increase, and this is huge. This is technology that is, again, it's hugely American centered in this country. It's basically crop genetics. The fact that what we've done over the last 30 years is that we've been able to genetically alter crops to make them more drought resistant, more heat resistant. The fact that we can apply herbicides on top of them to kill the weeds, but it doesn't kill the plant. To do all these type of things, and to make them, basically insect resistant as well, has been a huge factor that's increased crop yields. And you combine that with good weather, and you combine that, like I said, one of the most bizarre things is that we've tried to disaggregate these returns. They're very interesting. Like, what is behind the relentless increase in crop yields over the last 40 years that we've seen? And you could make the case it's primarily fertilizer application. The fact that we're just applying more and more fertilizer to our crops. So it's a variety of things. All that other stuff, you like, indoor crop growing, vertical crop growing, hydroponics. I think that's all, that's more marginal. Uh, and it's basically the big source of technology has been crop genetics.
So what about investing in farmland itself? Do you see that as being
Yes,
a place
I,
to
I
be?
yes, I own a farm. I own significant farmland. I believe that any a wealthy individual should own farmland as a diversification in their investment portfolio, as well as being a good investment going forward. For smaller investors, I won't talk about them now, but they can find out. There's a couple publicly traded farmland REITs that are out there that you can invest in. So I would recommend that they do their research and talk to their brokers and see whether that those are suitable for them. So yes, I agree that people. And, it's interesting. One of the the trends that's emerged that people are starting to notice is that the Chinese have started to emerge buying farmland in America. No one knows what they're really up to, but they're starting. And it could very well be that they have run out of good arable land in their country, and that they are looking to secure food supplies in other places, including the U.S. So, there are marginal buyers beginning to emerge in the U.S. farmland business.
Well, that'll be interesting to see. I can see strategically how that would make sense, but I'm pretty sure if we get into a food crisis, the U.S. will step in and say, "Sorry, we're going to have
Yes,
to confiscate
I,
that."
I agree completely.
But no, Leigh, I really appreciate you coming on the show. I mean, this is such a great topic, and it's such a basic topic that everyone should understand, and it's almost never talked about. I never hear anything in the media that talks about this to the degree that you are. So I really appreciate you sharing your wisdom with us today. Where can people find more about you?
Okay, like I said, I'm half of the firm Goehring and Rosenzweig Associates. We are an SEC registered firm. We're well known for our research, but that's not really what we do. We're money managers, and we manage the Goehring and Rosenzweig Resources Fund, which is a 1940 Act open-ended fund, which is available to all investors. For those that are interested in our research, we write a very, very well-read uh, natural resource commentary that we write on a quarterly basis. Those are all, you can download them for free. They cost you nothing on our website, and look at them. We touch subjects and cover subjects, in an in-depth level that most people just don't do. We are very, very proud of the research that we've done, and including, if you're interested in the energy crisis and how renewables fit into there, download some of our letters. There's some great research on that subject. And for those that would like to hear more from us, we're actually having our second annual Investor Day on November 3rd. Go to our website. You can register, and I invite people to attend if they would like to come. You'll hear me talk about I'll talk a lot about what's going on in the global energy markets. We'll talk about renewables. I'll talk about the agriculture markets. We have a bunch of great speakers, including Sean Hackett, who will talk about global sunspot cycles and their impact on global agricultural markets this decade. So there'll be a lot of interesting stuff. So if anyone's interested in that, and they're in the New York City area, I invite you to register and come.
Great. Well, Leigh, I really appreciate you coming on the show once again. Thank you again. Actually, as I look at your speakers, you're going to have Edward Chancellor, who we're actually interviewing on the show in another week or two. So
yeah, he's going to talk about
book.
he's going to talk about investment cycles in commodities, and how
Nice.
the lack of investment is set up this commodity cycle that we're beginning to enter right now. So,
well, great. Well, I appreciate you coming on once again. Highly suggest everyone subscribe to to Leigh's research. It is phenomenal, and I think everyone can benefit from it. So thank you again, Leigh, for coming on. Since this will probably be a decade-long cycle, we'll definitely have you on again.
okay, very good, Kirk. Thank you for having me. Bye-bye.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. Wow, that was a great interview with Leigh. I really appreciate him coming on the show. I have to say, I love getting people with that kind of depth of knowledge, of that kind of background on the show. It's just really exciting, even though for the listeners, sometimes you have to listen to a few numbers here and there. But I have to say, I haven't found somebody who is more knowledgeable in the topic of agriculture and food trends. And his firm actually is also really good when it comes to energy. So kudos to Leigh. Keep up the good work. So now we're into the panel of the show. We have our very own Barb Friedberg. Hey, Barb.
Hi, Megan. Hi, Kirk. Happy to be here.
Glad to have you. And we also have our very own Megan Gorman. Hey, Megan.
Hi, guys. How are you all today?
Doing great. Doing great. Glad to have you both on the show. So let's just dive right in. Megan, let's start with you. What were some of your takeaways from the interview?
Yeah, it's funny, as we've been going through this type of market over the past, 12 months, or really even since the beginning, which is roughly around the beginning of the Ukraine-Russia war, I have been amazed in talking to clients how little most people understand how the food supply chain works. So first of all, I love the interview. I think he's incredibly smart. And it just kept coming back to something we kept trying to explain to clients earlier this year is, this ripple effect that's going on, is really a very, very big deal. And, if you take something like soybeans, right, where, the Ukraine and Russia handled a lot of the fertilizer for soybeans, which really impacted the Brazilians in growing soybeans to sell to China to feed their livestock. It's really unbelievable how interconnected we are and how most people don't fully understand this. So I think it's a really fascinating investing area. I also think it's a place where you have to be cautious because at the same time, as much as this is a great hedge against inflation, this is also a highly volatile area of the marketplace.
Yeah, no, I appreciate that, Megan. I think that's 100% true. Barb, what about you? What are some of your thoughts?
Well, first off, I'm thinking I should start a farm. And second off, I think I should become a vegetarian. But if we're talking about investing, that's another issue because this gets into niche investing. Look, if you are a passive investor, an index fund investor, you have a set portfolio in accordance with your risk tolerance, with diversified US and global stock funds and bond funds, then you may be looking at this and saying, what does this have to do with me? Well, I throw it out. And then again, there are the other investors who are stock pickers, who play who use options, who have a whole bunch of, who use technical trading strategies, who have a whole different set of investment principles. So I believe this niche of investing, which the guests really brought down to what are the sectors that are going to be impacted by these global economic changes and forces. And I'm going to throw out that anyone can benefit from learning about this. It's interesting. Do you need to take investment action? And one philosophy is that if you see a trend you believe in, you think it's set to outperform, regardless of what type of investor you are, then you might want to take action. He talked a lot about how, I never want to say can't miss, but given the demand for fertilizer in farming, that seems like a really good place to be. But for example, if you say, okay, I'm going to dive into some of these fertilizer stocks, you do your homework, you do your research. What you can't predict is, when are they going to pay off? Just because a trend is going in a certain way, it doesn't mean that it's going to pay off immediately, or that you will see results immediately, or there won't be bumps in the road. So I suggest to investors that you want to listen to these ideas, decide if they're worth implementing for you. Do you want to get into a sector? Do you want to invest in farming in some way? And Kirk, I'll bring up my ideas about farming later, because everyone's probably getting sick of me by now. And so come back to me later and I'll talk about how people can get into farming.
Well, we never get sick of you, Barb. So that's no, I haven't heard any complaints about that. So let's talk about kind of pros and cons of investing in commodities and farmland, because this is an area that probably, I would say I'd be lucky if any listeners have had this in their portfolio prior to this year. When it comes to farming and farmland, it's just not a sexy area. It's been out of favor for over a decade, just like value managers. And so I doubt people have this in their portfolios. But, Megan, I know you deal with a lot of wealthy clients, and I know, from my experience, a lot of wealthier people tend to have farms or farm-related assets. So how do you see kind of this, pros and cons of investing in commodities or farmland?
Yeah, look, I think a lot of this comes down to choices. This is an incredibly volatile area, right? So in portfolio construction, when we're doing any allocation to commodities, we're really only sizing it in a range of 3 to 4% of the overall allocation. And in positioning it, it is a lot of discussion about what role this asset class is going to play, right? Hedge against inflation, right? We want to take advantage of opportunities and trends that we're seeing, but we're not going to put everything on red, right? And that leads us to the second part, which is, in this asset class, my firm believes much more in active management versus passive, right? And part of that is, why active management, right? Well, first of all, if you look at the two commodity indices, right, the S&P GSCI index and the Bloomberg Commodities Index, both of them have very different allocations. So if you're, on the passive front, do you want to be matching those indices? Second, on the active front, you need someone who is understanding the space and able to make strategic decisions. So for instance, in the funds that we have our clients in, our fund manager actually isn't investing in fertilizer. But what they have made a decision to do is be overweight soybeans, right? Because soybeans is part of that overall chain in the food chain. And so that's how they're deciding that they want to pick up, potential return for investors inside their funds. So I think it's really, really important as you allocate here is think about what percentage of your portfolio should go in. Think about passive versus active. I would strongly advocate active. And then the nice thing is, look at the fund managers out there that work in this space, right? And really start to read their commentary, because you're going to start to see what their philosophy is, how they allocate the funds, where they see the different opportunities in there. And you have to decide, based on what interests you, where you want to deploy.
Yeah, no, I think that's a great perspective, Megan. So Barb, what about you? I know you've got some thoughts on investing in commodities and farmland. Kind of, what are your thoughts on this?
The drawback of investing in commodities is there are no dividends. So you're dependent upon, you're laughing, Megan.
No, it's funny. I don't always think of asset classes by which gives, I wouldn't expect dividends from commodities. I see it as a different play in the portfolio. That's why, but it's what I love about being on this panel is you make me think about things differently, right? And I know you have more of sometimes a retirement income stream focus. So I love it. I get it. That's why I wasn't laughing at you. It was just it was an interesting idea that I really didn't think about before.
She was laughing near you, Barb.
Yeah, I was coming from a place of love.
No explanation is needed. Yeah, but many investors think dividends are important because if you're only dependent on capital appreciation, when a stock goes down or a fund goes down, you're left with nothing. At least if you've got dividends pouring in, you've at least got something when your asset value, like the bonds have tanked this year. But on the upside, you're still getting those coupon payments. So that's something to think about. I think that for many investors, they want to be passive. For investors that don't and they want, I resonated with what you said, Megan, about you want just a small 3 to 5% of your portfolio to be invested in things that are speculative, questionable, riskier. Because that way, if they tank, you're really not out a huge amount. So I would place commodities investing, farmland investing into that pool. And then a lot of us, we like to take a position in something that from our research we believe is going to outperform. And I would put this type of farming asset class in that category. And back to farms. There is a big trend. I'm not saying positive or negative, whether you should or you shouldn't go with this, but there are a lot of crowdfunding platforms that have sprung up, two of which in particular, and there actually are probably more, allow you to buy a piece of a farm. So if you think farmland is going to appreciate, then this is a super easy way to access the farm asset classes. You don't have to go out and, go to Wyoming and buy a farm, but you can go to a crowdfunding app. And my website, Barbara Friedberg Personal Finance, and my YouTube channel, Barbara Friedberg YouTube, has some information about the crowdfunding farming platforms.
No, thanks for sharing that, Barb. That's great. One thing
Can I jump in here real quick?
Yeah, absolutely. Go ahead.
How does your firm handle commodity exposure? I'm just curious because we're coming from sort of the same, but I'm curious if any difference with how you guys approach.
Yeah, I think it's a good question. Appreciate you bringing it up. I mean, the way I kind of look at it is commodities are, I invest in them from like a trend perspective. Like, are they trending? And I expect, because commodities have been pretty much out of favor for the last 10 plus years, we've just looked for kind of shorter term trends. But I think given that what's going on now in the markets, as Leigh said, and we've started seeing the same thing a few years ago, that things were getting so cheap and there were really wealthy people going in and buying farmland that it's something we've been eyeing for a while. And so I think for short-term trends, we'd probably look more for commodities, like just buying like an ETF or a closed-end fund in commodities, and just for more kind of short-term type of thing. But when it comes to a longer-term trend, we're looking right now at buying individual stocks, because I think you'll get more bang for your buck as for a 10-year trend or longer, depending on how long the shenanigans go on globally. Then you probably get better bang for your buck coming from the companies that are participating in ag or farming than you would just investing in the price. Because the price can go up and down, but like if oil's $100 and stays $100 for the next 5 years, you're not going to make any money on the commodity. But if you invest in the oil companies, service companies, exploration, whatever, then you can make a lot of money. And I think that's kind of how we're looking at it.
And Kirk, I want to jump on what you said, because underpinning your firm's idea about ultimately picking stocks and looking at the long-term trends underpins a basic philosophy, with the exception of day traders. If you're looking to pick stocks or follow trends, you don't want money to be invested in your trend, your stock, whatever, that you're going to need in the next 3 to 5 years. You need to be able to wait out the bumps, maybe plug in a little more cash when a bump comes, maybe from a systemic market risk, which could have nothing to do with the underlying trend. So when stocks fall, when the market is down, the market is down. It doesn't mean every company within the entire market has no prospects. So you don't want to put your money that you're going to need in the next 2 to 3 years in any of these type of investments.
Yeah, I think that's a good perspective, Barb. I think, one thing that kind of comes up is this concept of investing in niches. And I think a lot of people tend to be more global with their allocation, like large cap or small cap or international, and they don't really get into this niche investing. I'm curious on each of you if you think, I know, Megan, you probably have a different perspective because you're the type of clients you work with, but should individuals be investing in these niches, or should they just be sticking with the main assets? And I'll caveat this with a little bit. One of the stocks that actually invests in farmland has been pretty closely correlated to the index. So it's really a question of, does it even matter, or is just indexing good enough?
Yep, I'll take that first. It's interesting, right? Like, I think in these markets, when things are down and people feel the need to do something in these markets, right? And I think, people are always looking for interesting ideas, right? Nothing against the S&P 500, but we've all heard that before. So what I have found in this marketplace, what is really interesting to clients is certain niches, right? So multifamily residential is really, really intriguing to people. Owning industrial REITs is really interesting. Things like farmland, right? Or having a tilt to something like soybeans. People like these ideas because it makes them think that they are doing something by staying in the market, but being allocated. So I like having these ideas to anchor clients with the fact that you do have these pockets and they may perform in these type of marketplaces. And so they become sort of the shining light that gets them through these really, really dark times. So I'm comfortable with doing these little slivers of niches to portfolios if those pockets help with investor mindset and keeping the portfolio buoyed during certain times. And that's what we found over the course of this year. You know what I mean? And remember, when you work with clients, you're really a storyteller, right? You're trying to tell the story. And, there's the US story, there's the Europe story, and there's the Asia story. And you're consistently telling those three, threads to your clients. And so, as people see it's getting harder to buy houses, doing something like investing in multifamily residential becomes really interesting to them because that matches up thematically to one of the things that you've been talking to them about.
Yeah, no, I appreciate that, Megan. Barb, what about you?
It gets down to the type of investor that you are. If you are a hands-off investor, then you're hands-off. You either let your your investment advisor do it for you and take his or her advice. You invest in a robo-advisor, or you DIY a diversified index fund portfolio. But if you are someone like I think the three of us are, which is we're really interested in the investment markets in aggregate. And we all have our own individual strategies, our corporate strategies, but then we're always looking what's going on. So I think if you're that type of investor, then it's not a bad idea to take a small percentage of your portfolio and choose to follow trends or choose to invest in what you think might be a winner. For example, 97% of my portfolio is either in index funds or cash. 3% are in stocks that I think have the chance to outperform. Of those stocks that I have selected over, many years, 80% of them have outperformed, 20% have, have not. So for me, that's fun. So again, it's a personal decision. It's your own psychology. And that's a lot of what we're about here is we're opening you up to different ideas, to different strategies, to different types of investments so that you can become educated and then make the decisions that you believe are best for you.
Great. Well, I appreciate that, Barb. And in the interest of time, we're going to wrap it up here. So Megan, final thoughts from you.
Yeah, look, this can be an incredibly interesting asset class, but know how to size it appropriately for the portfolio, know the risks of the asset class, and really think through the benefits of active management versus passive. To me, this is one asset class that active management is a no-brainer for, right? So those are sort of the key fundamentals I'd work through if you want to deploy into this. And you know, it's one of those areas that can be a bright, shining spot when things are very challenging. So I'm Megan Gorman. You can find me at Forbes.com/Megan Gorman. Kirk, thanks for having me on.
Thanks for coming on, Megan. Barb, final thoughts from you.
I've got one word: education. Whatever you do, don't just follow the guy or gal next to you on Reddit, on Robinhood, on eToro that says, I made $1 million in this. Okay. Do your homework, whatever you choose to invest in. Don't rush to judgment. Take some time. If it's a good investment opportunity, it's not going to go away tomorrow. I'm Barbara Friedberg. You can find me on YouTube at Barbara Friedberg Personal Finance and at Robo-Advisor Pros. Bye. See you next time.
Thanks for coming on, Barb. And yeah, final thoughts for me. I think you all know I've talked about this enough. I love farmland and ag. I think is the next trend. I agree with Leigh that there's a tremendous amount of opportunity here. It's been out of favor for a long, long time, and that means that you actually probably have some good opportunities to look at this sector because it's been overlooked for a while, and people are still thinking about buying tech stocks on the dip, and they're not thinking about the next decade of food issues. So I think there's a lot of opportunity here. Like Barb said, do your own homework, do your own research. We always talk about this in the show, no matter what we say, you got to do your own research. Don't take our word for it. So that's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.